Welcome to video number 3 in our cost segregation video series, What and Who Qualifies? Okay, now the properties that can benefit from cost segregation basically cover just about any commercial building, be it new construction, recent new acquisitions, renovations, green projects, existing buildings, and leasehold improvements. So even leaseholders can take advantage of cost segregation to achieve tax benefits. Eligibility is from 1986 onward. That's not to say that a 20-year-old building can benefit, but they are eligible. Now, examples of the types of properties or what they're used for, apartments, medical offices, regular office buildings, hotels, self-storage, shopping centers, research and development, malls, auto dealerships. Basically, and of course even more than that, basically any building that you pass by, for the most part, can take advantage of this strategy. Now, in terms of items that can be reclassified, again, so we're taking, and separating real and personal property in your building, items that can be reclassified and the depreciation accelerated in either a 5, 7, or 15 year span. This is just really a brief list of examples. So you got things like millwork, HVAC and signage, wiring, be it telephone, data, and TV, special structures, decorative items. Really a really big list here, and of course there's many more on top of that, and that's a big part of obviously the service we provide, and that's identifying these things, determining which class, where they should be reclassified, and of course assigning a value to them, because many of these things are not just listed somewhere. They need to be unbundled from other costs, construction costs that you might have had. So again, a big part of what we do is reviewing all the paperwork and identifying these things and then assigning a value to them. Now, does your property qualify? So what are the general qualifiers? The higher the tax depreciable basis of your building, obviously the bigger chance of basically of a tax benefit, or a more significant tax benefit. But basically we like to start with around $750,000 or higher. Now of course the number will vary, but and then with leasehold improvements about $350,000 or higher. So again, these are general parameters. Obviously you have to pay federal income taxes. This is a federal income tax benefit, so that has to be that's a main qualifier. You have to operate as a for-profit entity, and then of course you should be planning to keep the building for at least a year, because most of your benefits will come in that first year. However, it will be over a 5-year span, so if you're looking to keep your building for a few years, it's probably even better, because you can take advantage of those. We are aware of like-kind exchanges, 1031, and how that kind of works together with cost segregation. So again, every situation is different. We'll help you identify what these potential benefits are, work with you in terms of what your strategy is going forward into the future, and really determine what makes sense. Of course, it's not just us and you, it's your accountant and any other advisors you may have. So the bottom line is this can be a great fit for lots and lots of commercial property owners, and it's worth the effort to evaluate. So you might be wondering why your accountant hasn't told you about this, or what, some of you may have experienced some feedback from your accountant. Yeah, cost segregation is relatively new in general, but it has been around for several years in terms of the way it's used now. The investment tax credit, if you remember from our previous video, has been around since the 60s, but basically cost segregation, the IRS has made it very, very easy to take advantage of for any commercial property owner. So you talk about Big Four being, this only being used by the Big Four. Well, in the past it was, and there wasn't as many companies like Cost Seg Advisor to help smaller companies take advantage of this. Most small accounting firms do not have the expertise in-house, the construction and the engineering expertise, and or the manpower to go out and actually do the cost segregation and evaluation on site. So it's really something that used to be just the Big Four. And again, as I said, construction engineering skill set is required, not just tax, and most accounting firms don't have that in-house. Now, lastly, it's important to know that we teach the subject of cost segregation to accountants for continuing education credits to CPAs and accountants around the country. And of course, we want them to have a better understanding of how they can leverage this strategy for their clients and help them, have a vehicle to take advantage of it so that they're more proactive in bringing it up or looking at it as a potential opportunity for their clients to reduce their federal taxes. Okay, so in the next video, we're going to cover cost segregation methodologies in more detail, and that's a very important subject to understand the differences. And look forward to speaking to you then. Bye for now.